Welcome to Momentum Monday. Today is August 27th, 2023. Howard, why are you dressed in all black?
It makes me look thinner. That's what the polls, the reader feedback, wear black. How are you, buddy? Good weekend in San Diego. I had to leave. I'm in Toronto tonight.
Yeah, beautiful weekend. I just spent a few hours in Coronado.
Oh,
The beach is still closed.
the beach is closed and now there's E. coli in the water.
Yeah, pretty much.
So you can't drink water, so I left town.
Yeah.
So you couldn't go in the water. All right, well, let's wade into the markets here. You see what I did there? That was not bad.
Yeah, pretty good. Let me just switch. What a good transition. Yeah, I mean, last week we had an oversold bounce in the S&P and the Nasdaq Composite. They rallied to their flat decline, flat 50-day moving average, declining 20-day moving average, where they found resistance and where they were rejected. So, and as I said, it's not just the S&P, it's also a Nasdaq Composite, which encompasses a lot more stocks, the same price action. So right now, I mean, it's very likely that we either see more chop until the indices can retake and go above their 20-day, their 50-day, or another leg lower. These are, I think, for me, the two scenarios for the next week or so. Chop, which is more likely, or another leg lower. That's how it's looking like. I mean, NVDA, they crushed estimates again, gapped up and sold off. And typically when stocks sell off on good news, that's a topping behavior. I'm not calling a top in NVIDIA in the longer term, but for the very short term, it seems like it needs time to base again.
Yeah, it reminds me of Qualcomm. Like I think it's hard when a company's growing like this not for the stock to go higher, but it seems like I was back in 2000, but 99.
2000, we can find it.
Yeah. Look at
2000.
you, Mr. Computer.
Here we go. So this is from the
What do?
night
From
weekly.
five, people are just. What's beautiful about, I guess, going back to
200, 5 to 200 in.
I wonder what the market cap was. Can you pull that up when it went from 5 to 200? There should just be the history channel of investing. That might be just a great show. People think this stuff is all new. And then you see what 5 shows a 20 bagger in the same amount of time that NVIDIA is up 5 bagger. And just think of the coverage that NVIDIA is getting. But if it's a stock like Qualcomm, do we know
to January 2000? So basically in less than a year or so.
Yeah. I mean, that is the all-time. There was CMGI and Internet Capital. We should have a history channel, but look at that. It didn't stop. There was a couple like reversals there in Qualcomm, but there was a stock called CMGI.
It doesn't exist.
Well, it did back in the day. It'd be fun if we could go back. I'm going to figure out a history show, but if you think about 98, 99, it was very much like the first run at mobile. And Qualcomm had the chips for it and the internet. And that was the stock. I think Taser was one of those too back then.
Like Exxon,
but it was called Taser. Yeah, see how far back Axon goes.
And they don't show the data.
It is a great lesson.
Doesn't exist. But yeah, I remember Taser, yeah. Yeah.
But it was, but anyways, if you go back to Qualcomm that era, that's what NVIDIA feels like. I think if earnings continue to grow, the stock will just base. But it's just too many people already know the story for it to surprise you. Internet was still so fresh back then, as was Amazon back in, wow, what a run that was, $1 to 100. But Qualcomm was better.
Yeah.
Was better. But so that's what NVIDIA reminds me of. It's the first run of AI. They got but anyway, it's great earnings. It's just nobody doesn't know the story. What is working? You know what's funny, Ivan, is like it's just going through, and nothing more hated in my industry than enterprise. But Workday, which is just a massive enterprise
Workday and
software,
Splunk, yeah, both of them trying to
yeah,
break out on earnings, yeah.
yeah, let's look at that. So
We go
just
here quickly.
oh, it's not Splunk, but yeah, but Workday probably no, that doesn't look that great either. Workday, huh? Uh, okay, well, there's another one I saw. Blue Chip Daily say Emerson Electric EMR.
Yeah, this one is definitely setting up, looking
Design and
constructively.
emerging industrial consumer markets, just boring stuff.
Yeah.
Look at that, constantly making $4 a year, trading at 25 earnings. So the market's just kind of hiding out. No one's like
There are
rich.
not that many great setups on the long
No,
side.
no, but I'm saying, and the ones that are like cash cows. But it's hard with Apple and NVIDIA's earnings now out and not going anywhere. It's just like we're in kind of like no man's land, and I think you have some fake outs. I'm still waiting to see what happens with. There's so many false starts with the student payment. So next week we'll have some more insight there. I think it's okay. The last month of August, I'm traveling. I think a lot of people are traveling, getting their kids back to school. I think it'll be a pretty quiet week. I'm
I
trying
mean,
to think.
retailers are getting just
Well,
smoked.
as they should. Yeah, that's interesting, Ivan, because I wrote about it today. The best retailers are the dollar stores, but they're like, it's just like crime infested neighborhoods. Oh, maybe not Dollar General. I thought, oh, wow. So all the dollar, like just,
The
I'd
vast
like to
majority of
Nordstrom.
them, yeah.
Yeah, Dick's was complaining about theft. I'm hearing crazy stories from my wife when she's in Ulta or some
Like,
home stores as she shops for a house, that people just walking in San Diego and just filling their carts and walking out. And the store people just saying they can't do anything about it. So it's kind of sad to see that not just San Francisco, but Phoenix, San Diego, hearing these stories that like people feel entitled. And I guess, I mean, I hate that word, but people feel emboldened to just walk in and steal. And, and then half the retailers you go to, even on Walgreens, everything's behind a lock. I don't know where you shop for your stuff. Luckily, I have Ellen that just orders me stuff.
usually
But
Amazon or Costco. For everything.
so Costco probably the last remaining fun experience, even though I hate it, fun experience for people. They go get a food and but they have that recurring revenue model that people will pay. Retail is just, all at once imploding now. Nordstrom, JWM, I think.
Yeah. Yeah,
So
exactly.
there's the retail index. Okay.
Yeah.
Yeah.
Wow.
Ooh, it's over. Where's the gap? Yeah, that last run
Well,
post.
stuff like I think Gap,
Oh my goodness. Back
like
to
the
eight
ones
from
that are highly
34 to 8.
shorted are doing
Oh
okay,
my God, that
man.
was the short squeeze that ended all. That was the final short squeeze.
Yeah. I mean, stuff like
Oh,
ANF, like highly shorted. What was the other one?
oh wow, Abercrombie. Okay, so
Yes. These are all highly shorted, so they're experiencing like a short-term short squeeze. Obviously, in the long term, they're nothing special, but
yeah.
yeah, as in general, retail is really looking horrendous.
I was going to say the speculation is still out there. That's like I say, the speculation economy. This Vietnamese car company. And
Oh yeah, VFS, crazy moves. Yeah,
so there's Qualcomm in a month. So what you're seeing is there's still going to be speculation. There's still people that don't know what they're doing on both sides of the table. But I was going to share that the meme stock where everybody was having fun for 3 years is over. GME, there'll be some squeezes on the way to zero, but GME, they wasted all this time going nowhere. Remember that? I mean, this thing is going to end up back in
no,
pennies. AMC gapping down 20% a day. Congrats to some of my friends who were short this. I didn't have the nerve. And look at that. Just a scam. In the end, terrible product, no profits, secular trend against it. And yet people for 2 years have
they
been
even
holding.
bought a gold miner at some point.
So there is speculation, it's just moving. And but the huffing and puffing is really fading out, and the big money is crowding into cash cow secure earnings companies right now. So during this higher interest rate, and we have to remember that high interest rate. Look at Apple. Pull back up Apple. They earned $1 billion on their cash, so they're a unicorn on their interest income last month. Um, so that's 10 to 12 billion at this earnings in cash interest. That's like one person can handle their Wells Fargo account. And I'm kidding, but you know what I mean? Like, so that company's spitting out 12 billion a year in cash. It could be run by two people and they can go acquire over 10 years most of the S&P with just their cash balance. So as bad as it is for struggling people, this is a great moment for rich people to have cash and to look at alternative investments. I personally, at my age, looking at private credit. What's wrong when if you can earn 5 or 6% in cash, there's very simple private credit strategies that will earn you 9 to 12 pre-tax. And so you're going to have to really we went from years where you had a stretch for yield to maybe a decade now. I hope I'm wrong, but maybe a decade now where people with capital will not have to look at the stock market. And I think that's why you're starting to see the money come out of these speculative things and stick to steady growers. And it's also why the FANG is taking a breath, is because people are taking their money and saying, listen, had a great run, stock market was fun, but with 9 to 12% in simple private credit, pretty consistent stuff. Without reaching too much right now, you're going to have to convince a lot of people with big money to buy the dip. So I don't think there's anything bad out there. I just think it's just kind of not a perfect environment. So you got to pick your setups well. Is there anything that you're looking at? Any
I mean, at this
sectors?
point, it's just mostly intraday for me in this choppy tape, but we're having constant gaps and constant fading. So I'm just taking I do definitely trade less and smaller position size. I just take the occasional intraday trade, the occasional options trade, but in general, I do a lot less. I mean, there's obviously some stocks that are holding well, but so far anything that has really held well, it just has been just getting hit. So the ones that are really showing relative strength are not something that you can really hide, as we saw with Google was holding well, then it was kind of slammed. It's just stuck in a range.
Yeah, second range can't get above this 130 closing
Yeah.
and stick.
So there are a few names that are holding well, but nothing that you can really chase in this.
Well, what's the longer term? This is one of those MOOCs.
Longer term is not that sexy, but yeah,
but bottoming.
yeah.
What's the valuation there? I know that people
2.5 billion.
still not profitable until next year's.
I'll work the same way. If you look at monthly,
Is there a profitability there on the horizon? Hang on. Go back.
yeah. So
60 cents. Okay, if they can stick to that number, you can see why they bounced. Okay. Yeah, these companies are going to have to prove themselves, but Coursera is definitely part of that trend.
Fastly showing some strength.
Wow.
Again, trying to bottom. It's not near all-time highs for sure. There are a few names, but when there are only a few names, it's typically not a great environment to be very aggressive on the long side, especially swing trading. So you just need to know when to just mostly observe and protect capital and confidence, and when to be aggressive. And now it's not really a time to be super aggressive as a swing trader.
So long-term trend follower, it got nothing for you. I think like e-commerce is the only if you look at the opposite of what's happening to retail, the best retailers will do better at e-commerce. So the only secular trend is e-commerce, right? But who knows how
How do you
truly
play that though now? I mean, Shopify is just taking its time. I mean, at least holding above its 200 days.
They're not cheap, right? It's still trading 60, 70 times next year's earnings. So
They're
it's
not cheap at
holding,
all.
but it's not cheap.
And we have Amazon.
Yeah. But we just never know, 40 times, 50 times earnings still in a 5-6% interest rate environment where we don't know how profitable their logistics really is. I mean, they can hide so many things. So as big a secular trend as e-commerce is, there's still kinds of old supply chain and other issues. And on the e-commerce trend, I prefer the luxury stuff because they have higher margins. So it's not just all e-commerce, but the one big secular trend still happens to be e-commerce. Yeah, what a mess. So individual stock picking, pretty tough right now, I would say. And if you're up against the Ivans of the world who are swing trading, for a career, you're going to get your butt handed to you. So that's why I'm not trading. All right, buddy. Well, I'm going to enjoy my week here with family.
All right.
Hope you have another good week in San Diego, and we'll catch up next week.
All right. See you next week.